Greetings, everyone. Happy Wednesday, May 21st, 2025. Oh boy, do we have a program for you today. A lot happened in the markets. Let us take a look. The headline, of course, was real estate, bonds, and of course, Bitcoin breaking out to new all-time highs. Let's share the doc. Without further ado, hope all are well. It's been very busy, as you can imagine, but could not do a show today. What an amazing, a lot of stuff happened today, but let's just put it that way. So real estate and bonds absolutely broke down today, specifically at right around in the afternoon. We had a very poor auction. Of course, if no one bids the bonds, the prices sink, shooting yields higher, and that's exactly what happened. And when that happens, it does put fear into investors, and they sold the market and asked questions later. And of course, Bitcoin just barely squeaked by to new all-time highs, 109K. Now it came off just a touch during the sell-off, and now it's recovered better than SPY. So let us take a look at some charts here. Without further ado, hang on. Hope everyone is well and navigating this craziness just fine. Okay, here we go. So first off, let me just, single stock moves. This is the ETF edition. Usually when the market has a massive, significant more than, 1%, 1.5% move, I like to do the ETFs to really help me keep focus for the multiple standard deviation moves. Stocks are going to move all over the place, even on quiet days. So it helps my focus when I look at the top-down analysis. SPY closed down about 1 2/3%. Yikes. Q's down 1.5%. Although we've been on a massive tear, of course. We'll take a look at the charts. Tesla down nearly 3%. Nvidia down 2%. United Healthcare sliding again 6% on some really shady news that they're paying thousands in bonuses to hospitals so they don't transfer sick patients. So a lot of shady stuff going on at UNH, and that's why that guy, one of the reasons why he shot at that CEO, and people aren't so sympathetic. Google up 3%, bucking the trend. They had some crazy visual software. It looks like Hollywood Netflix type movies, but it was really just AI through this new Google thing called VO. It's crazy. There's no bounds. Now AI, Apple, big slide of 2.5%, nearly 2.5%. Palantir giving it back 4%. What else here? IWM looked poor all day, closed down nearly 3%. That is a significant move. IBIT, new all-time high. That is a new all-time high when it touched 62.5 today, up 1.5% today. Congratulations to all my Bitcoin holders. Been preaching it literally on this show all year, the place you have to be, followed by gold, and then that Europe and then China story. And honestly, nothing's changed. And we'll leave that at that for the single stock story. So again, here in terms of the intraday, so we were actually doing just fine, holding VWAP, actually really nice trading, hitting resistance at right around 592.25. And then the auction came out. And if you didn't notice what had happened, yields absolutely skyrocketed, and it took SPY down from 592. And when you really took notice, that black line is the 200 bar moving average. I have each bar constituting 30 minutes, and VWAP is the orange line here. It sliced through that like a knife through butter here, and it sank right through 590. Found some ground at 584. Started to recover a little bit, and then they flushed it even more towards 3 o'clock, all the way down to 582. So a big move. We closed 1% lower than VWAP. So not really great, encouraging trading there. Slurring. I had been saying that the market has been on an exceptional tear, but I did assume or think, I shouldn't say assume because that makes an ass out of you and me. I had been saying that we were going to make at least a push towards the 21-day exponential moving average, which is 571, 572, right around there. SPY a big plunge of $10 today, from 593 to 583. So that is still my full, intent here. And what I'm seeing is in the next 2 weeks or so, this may have been the beginning of the flush to get us towards 572. And then just for reference, the 200-day moving average is 575. We'll see. It might hold right along that. Again, I'm placing a lot of importance on moving average. So the 200-day, our 10-month consensus of what the market is worth, that's stuck smack dab at 575. And the much nearer term average, the 21-day exponential, which I use very much in my trading, is 571. So right there is where I think we're going into by the end of the month, early June. We shall see. This 200 moving average is very, very fierce. We really do hope, especially if you're long a bull, we do hope that 575 holds. I think it's going to come very close to. I'm very curious. A lot of momentum in the market. You see all these moving averages starting to swirl upwards here. It's very possible that 575 holds. If not, still within 1% of that. All right. So let us get through some of these moves. Some of these were absolutely humongous today. And of course, let's see what the implications are for, cross asset where it appears. So first we'll look at the gainers. There weren't a ton. And this actually really ripped. We're not going to look at IBIT. We're going to look at BLOK. It was up 7%. This is your strategy, Coinbase, Galaxy Digital, Robinhood, etc. This is a new high here. As you can see here, it's not an all-time high. It is important to know that was back in November 2021 for this specific ETF. It's 15% of those three names that I had just mentioned. But this is a 52-week high. A nice looking chart. This thing was kind of in purgatory, honestly, from February 28th until just about 2 weeks ago. And now it has quickly ascended. Look at this. It's almost like a God candle right here. And you see new 52-week highs. This thing has been overbought, meaning you've had to be in line to buy this thing and most likely overpay for the past 9 days. Once we had this nice break above $44. Now what? And what basically goes for BLOK, essentially, more or less goes for IBIT, although I'm not looking at the IBIT chart right now. Obviously, this looks fully targeted, fully valued to me at this stage. I see a small pullback to about 45 in the next 2 weeks or so. It's actually not that small. That's 8 points from here. But we shall see. I think there is going to be FOMO, especially with the fear in the market in terms of just trying to capture beta. But this ETF is performing super, super stellar well, as is crypto, obviously. But BLOK, if you own this one, congratulations, up 7% today. That is a massive move, multiple standard deviation, even for a volatile basket like this. Next, volatility. I had said, I remember before I said to New Orleans, I said right around here, I thought it was just too cheap. I like when things just tag at the 200 moving average. It makes sense to me. It's just kind of getting almost like a bargain. Who doesn't love a bargain? Yeah, it touched 51. I said, in case a tweet goes wrong here, something goes bad here, China retaliates here, some sort of rhetoric, it's worth the value. And yes, much of the move was today, up 7%. But had you gotten in right around 51, that's a nice 10% move in VXX, the volatility, short-term ETF. I think so. This is a kind of maybe going to be a mixed picture. If I see the S&P declining to its 200-day moving average, like I said, it's another 1 to 2%. I see VXX going up to about 58. So just a little bit more, about $2.50. That's the 21-day exponential moving average. It will be directly inversely correlated. So if SPX bucks, I think for you technicians out there, if we start to trade below 575, you're going to start to see this start to trade above 58, and that's going to be the trade. There is a convergence here of moving average right around 58, and I do think it makes a lot of sense for us to be there in about 1 to 2 weeks' time. Again, I'm expecting kind of a crescendo of sorts, end of month, right around like after Labor Day into very early June. So that was VXX up nearly 7% today. So you have the BLOK basket, VXX up 7, and there's really only one other big gainer, and that was South Korea. Let's take a look at this. This is trying to have a character change of its own. It tried on May 5th, Cinco de Mayo, although it's South Korea, so I don't think they had a ton of tacos on that day or cervezas. But as of May 14th, now it's really trying to get something going. It's holding a 200 moving average. I don't love buying things above a significantly sliding 200 moving average, but it is technically support at 58 right now, today, up 1.5%. There is pretty significant resistance, I'd say, at 60 on the EWY. My short-term forecast for this, this is a tough one. Like I said, I really bowed down to the 200 moving average. I just think this has a date with $57, which would be a slight haircut of the 200-day. I think it's not ready yet for that to happen, but a lot of positive trading in this group in South Korea since mid-April. This has had 5 weeks, 4 to 5 weeks of significantly higher trading from 54 to 59, up 10% in a month. That is significant for South Korea, a typically low ATR, average true range ETF. Tony, I see your question. Do you think Palantir bounces here? You're the Palantir boy. How do you say Palantir in Italian? 120 looks like nice support. We will take a look at that at the end of the show. I'm going to give you a teaser. Thanks for that. I will pull it up at the very end. Now, let's look at what got taken out to the woodshed. Very important. This is what really drove the market today. When rates skyrocket, nobody even thinks about getting a house with the current mortgage rates. So real estate took it on the chin. Real estate looks very sick. I know there's a lot of people saying housing is finally going to implode. The chart looks bad. This is the 200-day moving average is right here. It's just started to descend by 2 cents a day, like literally as of yesterday. It's at 96.55, and now here we are at 92.5. The low came with the S&P lows April 9th, right after it got away from its oversold conditions here. This has not been trading so stellar. There's really been no reason, I would say, in a durable fashion to own real estate after the Fed cut rates, ironically, on December 18th, because ironically, that's when rates started to shoot up. I do not like this chart here. Short term, it probably tries to find a balance around 94, but this is going to be significant overhead, in my opinion, this 96.50 line for real estate for quite some time. All right. Next, take a look at the bond. They were almost all down multiple standard deviations. We're going to look at the long-term corporate bond. Looks absolutely terrible. The TLT, which we also could have looked at, but this had more of an actual move. TLT hit another 52-week low today. We were talking about it yesterday on the chart report on Spaces. If you joined us, that's every Tuesday at 11 a.m. It just looks like a money flow sell in terms of these bond ETFs. Fixed income does not look so great. Of course, the auction day was horrendous. Bonds, again, really no reason to own this at all. Around Halloween week, it was just kind of treading water, and then really it gave up the ghost December 12th, the week before the Fed cut, and really no reason to own this. It potentially tries to bump up to about 73.5. Today was, like I said, a gross amount of sales, but I think maybe it gets back to that 73.5 line, which would be at best a 50 RSI. I don't see a long line of buyers to say, ooh, let me buy bonds. Yields are going down in the short term. Don't see it happening. We do have a bit of a debt crisis, and people are starting to notice it, hence why they're buying gold, Bitcoin, other stuff that's, a little bit able to weather those storms. And the next one, a bond proxy utilities, got hit very hard, down 2%. I was presenting on this in New Orleans last week and saying there's definitely much worse places that you can be in utilities. I like this group. It is one of the better performing sectors. So full disclosure, I thought this hit full value target right at 83. I did not love the risk reward at 83. So a little bit more zigzagging at that point. But as I said, a beautiful rising 200-day moving average. This thing's really got its legs underneath it since about a month ago, right around April 22nd. Really, really impressive trading. Today got hammered, obviously, with yields ripping. Short-term target, this one's messy because when you hit fully targeted, again, look at the 52-week high back here. This was on Thanksgiving, or, the Thanksgiving Eve, rather. It hit 83.41. It got within a rock throw away yesterday, and then gave it up all back today, more or not. So this is a nastier chart. I basically see this is going to be super helpful. I see it hovering right around 81.5 in the next week or so. But there are worse places. I do like utilities, especially if folks are getting scared of exposure in the market. They're going to likely flee to something like utilities. And the story, I don't think, is changing overall. Top 3 gainers of the past 5 days. We had talked about the gold miners, saying that pullback was your invitation. There's 2 things that stand out when you have a breakdown to not even really a breakdown. When you have a pullback to the 20-day exponential moving average, not really, you're getting something slightly on sale. You're getting the monthly price, obviously. When it pulls back to the 50, that is much more significant. Either something you believe is investors saying is wrong with the fundamental story of the underlying, like gold miners, which I don't believe that is so. It had just gotten ripped a little bit too much to the upside, and now it's a reversal buy. I absolutely love it down here. Like I said, you can check the tapes from I believe last month. I'll check my notes here. I said if you get in under 48, absolutely incredible. So here is my cursor at 48, even right around there. It actually got as low as 45. This thing moves. It is high ATR, average true range, high volatility. The GDXJ, the juniors, are even more volatile. I love it here. I think this one's going to 52. Today it was up 1.33%. This thing is up 9% in the past 5 days, which is why we're talking about it, for an average of almost 2% a day, basically in line with what it's doing. I think next up is $52. I'm not so quite sure it's going to eclipse and take out its 52-week high of 53.25 struck on April 21st. But I do think it's got about another $3 to go here. I think it's going to have a nice 2-week run, which is almost informing me, like I said, when we opened the show, cross asset, thinking what rips up and what breaks down. if they're going to flock potentially into gold miners, you think the S&P could get a leg lower, small leg lower, that kind of confirms my thoughts. So I do see a nice move for the gold miners, up 8.5% to 9% actually in the past 5 days. Absolutely crushing it. Best place to be in the market from the long side were these gold miners after you got them on sale. Again, from 52.5, and it touched all the way. You see a doji there. You actually had a couple chances to get in at 45.5, and here we are now with a 49.39 close. Next, best spot to be, VXX. I'm not going to pat myself on the back too much, but it actually was a great buy. It's up 6% in the past 5 days. Yes, most of it is up from today. I was doing sideways stuff for 5 days, and now you finally got that rip. Like I said, it's got a little bit more to go, I think, just to about the so as the S&P has this massive rips, and like we saw the moving averages all going north, obviously volatility is going to start going south here, and you have a convergence of moving average to 58, and I think that's where we're headed. So about another $2 or so, another 3 to 4% climb in VXX is my forecast for the next week or so. And then next, we also said this a couple days ago, biotech could be the place to be potentially just for tactical trade. And it's been the third best long in the market over the past 5 days. Technicals walk, BS talks. IBB up 4% over the past 5 days, and it was down nearly 2.5% today. So now what do we do in the biotechs? Not overall, obviously a market leader, not at all. It was just a tactical trade. I think this is going to have a bit of oscillations right around 122, but I do think this heads towards right around 128. It's not going to make a run, I don't think, for the 200 moving average. So I'm not going nuts, going crazy over my skis here, but I do think it makes a move towards 127 to 128. I think that's in the cards. Okay, so IBB, the third best place to be in the market. So if you're in gold miners, volatility, IBB, congrats, you're absolutely crushing the market from the long side, even in this volatile tape. Trades that, excuse me, stand out was selling puts on the gold miners, would have paid handsomely. Also selling VIX puts. When we got to that level, a 200 moving average, it was worth the punt. I actually think I recommended that on the video last week, as well as IBB. We also said you could have sold puts, and you definitely would have got paid on that in a volatile group like biotech. Breathe. All right. Next, the top 3 losers of the past 5 days, and you know there have been places to be. I'm patting myself on the back way too much. My arm hurts. XOP, worst place to be in the past 5 days, down 4.5%. That was as good as it got to the 200 moving average. Again, respect a falling 200 moving average, especially one that an asset doesn't even come close to it since, Martin Luther King week, okay, back here in the mid to late January. So this doesn't look so stellar. XOP, I know there are some traders and portfolio managers at the conference that really liked XOP, kind of from the angle of so bad it's good. Europe is rallying. We got so-and-so rallying. Africa hitting new highs. Why not oil? It's still a market, in my opinion, where you got to be picky. I don't like this. This looks like it's headed. I wouldn't say the bottom absolutely falls out, but I think this is headed to about 115 or so. There's many other areas I'd rather be in than this. I don't think it's going to hold its 50 RSI. It actually looks a lot weaker in terms of trading than the other, like SPY, ARC, things like this have really been rallying since about April 24th. This just joined the party and is already starting to get back and head south. So don't really like this. I think this heads to about, like I said, just a couple more dollars, probably around 117 thereabouts. But I don't think this is the place to be for the next 2 weeks. XOP, the worst place to be from the short side over the past 5 days, down 4.5%. The next worst place, today down 2% XOP. Regional banks today down 3.5%, down 4% over the past 5 days. This is a good example of what we're seeing with the 200 moving average. Very flat right here at 59 even. It held above it for about a week, and now it's moving back towards its 50-day moving average to 56.55. So regional banks in a precarious place underneath resistance there, underneath prior support, the 200 moving average. I don't think this is the place to be for the next 2 weeks either. I think this heads towards about $54. All right, that's all I have to say about regional banking. The second worst place to be this week. And then the third worst, KWEB. So in terms of percentage, it was XOP down 4.5%, KRE down 4.25%, and then the KWEB down 4.1%. So all very, very close in terms of their losses. Chinese internet here. Yeah, I think this has a little bit more to go to the downside. I don't think it's absolutely going to flush. I love the chart. FXI is better, but this looks like it has just a touch more to go. Maybe in terms of duration, like another week or so of selling. I think this wants to probably head towards about 32.5 or so. I don't think the 200-day moving average will be in jeopardy. I think 32.5 would be a great entry if you're looking for one in this group. So the top 3 trades of the past 5 days, in absolute terms, if you were long gold miners, long volatility, and short XOP, you're absolutely crushing the market. Again, those don't give me warm fuzzies to buy, go rush out and buy Apple, Amazon, Microsoft. When gold miners are crushing it, volatility and short oil in terms of global recession or lack of growth, I should say. Because you can't really say that anymore, global recession, as Europe, Canada, Africa crushing it. It's on the U.S. side that we're having a little bit of issues. So that is it for the report. Let me look at what you got here. So Palantir, the question was, do you think Palantir bounces here? 120 looks like nice support out of our friend Tony from Italy. Let me pull it up. So Palantir down 4% today. I can't disagree with you on that, my fellow Italian technician. Yeah, I like the support here. I'm looking at the 21-day exponential, more specifically at 117 even. In a volatile company like this, can it give up a little bit more, literally like another $3 or so, especially with the market I expect to flush a little bit for the next 1 to 2 weeks? Yeah, possibly. So do I think it bounces from here specifically? It's very possible. The flows in this have been absolutely great. This is the greatest chart I've, we've looked at on the show today overall. But like, could it give up $3? Yes. But in terms of the risk reward, and this is what you're getting at, I think it maybe goes down to like 115 on the low side. And then still on the upside target, I like about 130 to the 135 level. So I like that risk to reward when you're looking at 3 down and, last I checked, 15 up. That's pretty good. What is that, 5 to 1? So I like that. I don't know what your exact exposure is to it if you're just long stock, but this is one of the stocks of the year. All right. I will see if I can do a early end of week show tomorrow. I will not be able to do a show Friday. I will be on the floor with one of my favorite bands in the entire world, a little band from California called Metallica. So I will not be able to do that. If I don't get to talk to you, have an awesome rockin' Memorial Day weekend. And for sure, we'll be there. We'll be talking to you guys on Tuesday. Good luck out there. Avoid bonds, maybe a dead cat bounce or something like that, but it looks like crap. And enjoy all my Bitcoin, all my hodlers. Absolutely crushing it. Continue to see how that trades. The place to be. Peace.